Hi everyone and welcome to the Newzad Brifki Show. Today I have a special guest, Jefferson Aldredge with Guild Mortgage. Welcome on the show.
Thank you, Newzad.
So can you please just do a rundown of introduction about yourself and
Sure, absolutely.
your background?
Well, I've been a lender in the mortgage business for 20-something years. I'm a father of daughters. I'm a husband of more than 26 years, so I've been married for a while. I've been doing loans for so long. It's the only thing I know how to do, really.
Okay.
So I spend a lot of my extra time hunting and fishing and playing golf and playing guitar and building stuff.
Wow.
So there you go.
That's
a little bit about me.
Very interesting life.
Yeah.
So can you just break it down briefly, Jefferson, about if someone wanted to buy a house, what are the steps or qualifications that you do?
Okay. Typically, I like to start with a phone call. I like to have a call with the family or the person buying the house and find out what they are trying to accomplish, because everybody's trying to accomplish something different. It may be they're trying to stay within a certain budget. They only have X amount of dollars for a closing cost. They only have X amount of dollars for a down payment. They may need down payment assistance, so every family has their own story. Mm-hmm. So you want to start with their story so that you can then strategize through the best type of loan for them. And then once you get through that process, then you kind of have an idea of what they're trying to do. Then you get their application into the system. Okay, and we have some families that are they don't want to do anything online, so my team will call them, take everything over the phone. Or we have a lot of especially the younger generation, they don't want to talk to people. They'd rather just go online and put in all their information. And we make sure that everybody can put their information in. It takes about 10 minutes. Once we have all that in there, we look at debt-to-income ratios, credit profiles. We work with the budget that the family is trying to accomplish. Then we kick out the pre-approval letter over to the family and the realtor, the agent. And then we also do a total cost analysis that walks them through all their numbers. So once all that is done, and we can do that in an hour. Like you could go online. Yeah, you could go online, put your information in 10 minutes. We could have everything done in an hour, and you are literally out shopping for a home that afternoon.
Okay. What message would you have for someone who's never bought a house or first-time home buyers? Do you have any special programs available, or
Sure.
how do you break that barrier of fear of I don't know how to start, or what do I do, and just give a rundown?
Yeah, absolutely. So I would say for when it comes to the term first-time home buyer, that is for the home buyer themselves. The real question is what does that get them? How does that help them? What does it enable them to do? And really, the main thing that it does, it gives them the least amount of down payment. So because not everybody has the ability to save up 20, 30, 40% for down payment, so if you are a first-time home buyer, you can do 3% down on a conventional loan, 3.5% down on an FHA loan, or you could do down payment assistance, which will cover your down payment. And that's probably the biggest benefit for a first-time home buyer. So the least amount down, which means the least amount of cash to the closing table, using down payment assistance. Meaning, using one of the programs that will then cover the down payment for first-time home buyers.
Do they have to pay that back?
If they live in the house for 3 years,
okay,
they do not have to pay it back.
Wow.
Okay, so now if they refinance or sell the home or do something with the home loan in the first 3 years, they will have to pay it back. Okay, so you need to be in the home for 3 years.
Sure.
Okay, so, just as a simple thought process.
Okay. At this stage, a lot of people have a fear of I don't want to buy a house right now because of the high interest rates. So how, as a lender, how do you relieve this fear that people are having? are the rates going to stay like this? Or what are we seeing?
Sure, absolutely. Good question, because there, like you said, there are people that are just scared, right? So here's the reality. When the rates go up, they always come down,
okay.
Right? So here's what smart money does. Smart money always refinances once you get through the rate cycle, because in the last 100 years, the interest rates have gone up at an exponential rate through 7 different cycles in the last 100 years. Well, we're in the 8th cycle of that happening. Okay, so we're the 8th time that rates have gone up like this in the last 100 years. Well, guess what follows? The rates go down. And when the interest rates go down, everybody refinances. So for the last 24 months that we've been in this cycle, all the families that have purchased their home, everyone will be refinancing. And my gut says everybody through about probably the end of 2024 that's purchasing a home will be refinancing starting probably early 2025, middle of 2025. That's probably when rates are back down into the lower 5s. Okay. They might even be crossing into the 4s, but let's just say, let's be conservative. Let's say the lower 5s.
Sure.
And then people that are purchasing now at 7%, 7.5%, 6.99% will then be in the world of, low 5s, 5.25, 5.1, and that saves, that's on a $400,000 house. If you're only putting down 5%, that's like $400 a month between 7.25 and 5.25.
And I'm glad you brought that up, because as a realtor, I have a lot of clients that were able to negotiate with the seller because the sellers know that rates are high, so they've been bargaining and dropping the price
absolutely,
to help the buyers out. And like Jefferson said, you can always refinance in the future. So what about investors? If an investor wants to get a loan, how do you work with them? Or what programs do you have available for them?
Well, for the world of investors, there's either a conventional loan where you have to put down 20% or more, which is a Fannie Mae, Freddie Mac conventional loan, because there's no PMI or mortgage insurance for investors. Okay. So if you're buying an investment property or a rental property or even a second home, same thing in the eyes of a mortgage, you still have to put down 20% or more. Okay, now in today's market, a lot of investors are doing what you would call a DSCR, debt service coverage ratio loan, DSCR. That's a super common loan for investors. Okay, so and we do our fair share. Now the interest rates are higher. So let's say today the interest rate for a primary home is 7%. Let's use that as the example, because things are kind of hovering around there. Sure. For good credit borrowers, etc. And let's say you were going to go buy an investment property and you were going to do a conventional loan. Well, your interest rate might be 7.875, 7.99. Okay, just as an example. Let's say you were going to do a DSCR, debt service coverage ratio loan. Okay, your interest rate might be 8.99, 9%, 9.25. You're going to pay about 1% higher than a normal investment property loan in today's market. Okay. So, and all a DSCR loan is basically said, okay, will the rental amount that you're going to charge the person that you're going to be renting the home to, or the investment property, will it cover the mortgage that you take out to whatever you're borrowing against the property? So if you have a $2,000 mortgage, at 8.75%, will it cover can you rent it out for $2,100? If you can, then you can do a DSCR loan. Now you might be putting down 15%, 20%, 25%, but you can, they will do that. So, it is a much simpler way to get an investment property in today's market. You don't have to do taxes. You're not showing taxes. You're not showing W-2s and pay stubs. It's, will the home, when you rent it, cover the mortgage that you're taking out?
Sure.
How about that?
That sounds excellent.
There you go.
So moving on, What sets you apart from other lenders or, let's say, a traditional bank?
Okay. I would say this. I'm a mortgage banker. So my world is about customer service and experience, in the sense that my goal, because I am completely, if I don't take care of families, no one sends me more business, right? So my job is to, once you are finished and closed, and to make sure that you've had a good experience. Because when you're at the barbecue with your family, and your neighbors are there and your family is there, and people go, hey, I need to buy a house. If you don't think, hey, you need to call Jefferson, this guy and his team really took care of us. We had a wonderful experience. That is my goal. If I don't do that, then I don't feed my children. How about that? I don't feed my family if I don't take care of your family. Mm-hmm. So I think the approach that we have towards how we handle and help and serve families probably is a little different than most. One of the things that we do for like all home buyers, we do a total cost analysis. So I set up a system after you and I talk, and we get all your application, everything in. Let's say you want to look at a $400,000 house, but you might go to $425,000 and you might go down to $375,000. So I'm going to build out your TCA, your total cost analysis, and I'm going to have 3 different scenarios with all of your numbers. Interest rates, payments, closing costs, down payment options, whatever you want to see. And then I'm going to film that for you, for your family, and then we're going to send that to you. So every day at about 4 o'clock, I film all my TCAs for all the total cost analysis that are going out to all the families. Well, it takes a lot of time because you have to film them every day. Your team has to build them. So every time there's a pre-approval letter that goes out, a TCA follows it. So another part of what we do that's different from a lot of other people. And I'm just giving you a sense of, but we also, here's probably a big one that a lot of people love. We service our loans. So we have $100 billion in servicing right now.
Wow. So
we don't sell your loan off. Okay. Now there's a couple of caveats to that, but our FHA, VA, conventional loans, we keep them. USDA, we can keep them. Okay. There are a couple of things that we can't keep because they're only investor offered products, like a DSCR. I don't get to keep a DSCR loan because Wall Street offers that, so they take it. It's just one of those things. But they for 90% of all the loans that we close, we're servicing those loans for life. And when you have a problem, you just call us. How about that?
Jefferson.
There you go. Yeah.
I forgot to mention there's another great program where many people who are already homeowners have a lot of equity in their homes, and they have debt or they need extra cash. Something called a HELOC. Can you talk a little bit about that?
Sure, I can talk about it. I don't do HELOCs, okay, but I'll be happy to walk people through it.
Okay.
Because I think HELOCs, the good thing about them is it gives you the ability to access the credit in your home, and you can only borrow up to 80% of the appraised value that you have in your home. So let's say your home is worth $600,000, and you have a mortgage for $300,000. Well, according to state law, to Texas state law, you can only borrow up to 80% of that. What is that? 400,000? Is that right? Or 500,000? Do the math for me. So Newzad's the math guy. He does taxes and everything else. Let's say it's 400,000, and you only want to borrow $100,000. Okay, so it's actually 120. So that would make it 480. 480 is our number. Okay. So you want to borrow $100,000, okay, from your equity in your home, and you don't want to touch the first lien because your first lien interest rate is 2.5%. So you go take out a HELOC, a home equity line of credit, take out that $100,000 so that you can go buy with Newzad another rental property or 2 rental properties, right? Because you say, hey, now is the time to buy when a lot of people are sitting on the sidelines. I'm going to go buy a rental property, right? Or 2 rental properties. Newzad's going to sell you something, okay? So now the other side of that is I'm about to have a close-ended second lien that you can take your equity out, not an open-ended. So an open-ended loan goes up when the market's up. Okay? On a close-ended, at least you know what your interest rate is. So we're about to have a second lien where you can take that equity out. I don't have it yet, but maybe by the time that this gets through production, we thought it might be coming out this week.
Oh, wow.
So we're going to have the availability to literally get people in a second lien without touching the interest rate on the first lien, without having to do a refinance of their first lien. So we have that coming down the pipe.
That's great.
Yeah.
That's a lot of good information that you've shared with us, Jefferson. I want to thank you for being on this show. Do you have anything else for our viewers?
I would say buying a home, it's a fairly stressful thing. Whomever you decide to do your mortgage with, it's a very personal thing. You spend 30 to 45 days, sometimes 60 days with them and their team, if they have a team, I would say find somebody you want to work with. Everybody, in theory, should be about a quarter of an interest rate, a quarter of a percent in the interest rate apart. The market's just not that diverse when it comes to interest rate. So I would say find somebody that you want to work with because they're diving into your finances in your personal life. Find somebody that you think you can talk to, that you can strategize with. It just makes your experience better. So that is, it just always, it's hard enough to buy a house sometimes on the monetary side. Okay. So it's easier when you like the person that you're working with. How about that?
Of course.
So
that's
just a thought process.
That's important.
Yeah, the person that's helping you with their money, they're not just helping you with their money; they're helping you figure everything out because there might be some hiccups, and you need somebody that you can go, okay, hey, Jefferson, here's the problem. How do we solve through this? Can you help me get through it? And people gotta want to help families buy homes. Okay.
Thank you, Jefferson. Appreciate
Absolutely.
it.
Thank you for having me. Thank you. Appreciate it.